Good morning, everyone. Happy Thursday. Welcome to the Meta Markets on Topstep TV. I'm Market Stalker D. I've been trading metals and energy markets for close to 20 years now. I joined Topstep in 2015 when I became their first female funded trader. If you're new here, my approach to these markets is heavily data-driven. I lean on order flow concepts such as market profile, tape reading, supply and demand dynamics, options gamma levels, and of course statistical averages to build what I call situational awareness. And that's all to do with finding high probability inflection levels, let's call them that, where the dealers are expected to adjust their positioning, which in turn creates our beautiful ebb and flow intraday. Now, every session on this show, I always begin by breaking down the higher time frames and seeing what the data is telling me in the metals and energy space, identifying some of the more key levels, kind of anchor points, and then talking through some of the possible hypotheses that we might see around them for the narrative that they're creating. But before we start all that, please read the risk disclaimer to make sure everybody's on the same page. So do not blindly follow trades that you see us doing, because this is not a signals class, and my style of trading is usually quite different than most people's. I'm able to hold trades for much longer than most, and my tolerance to sit in trades that I know do something eventually is much higher than most traders that you will see. All right, with that out of the way, let's have a look at how the markets are doing overnight. So far, it's all been a little bit quiet with a little bit of movement just recently. Let's start with gold, high time frame. This is the weekly time frame. So what do we see here? We see a morning star. This is what Dakota calls a version of a 3-bar reversal. So on the weekly time frame, this is all pretty bullish. We've created a new higher high as well, and the space for now seems pretty clean to kind of rise back up at some point up to the supply that was created a while back. At 5,200. In the more shorter space time, the 5,000 level still is a good round number, but we'll see what we have around there. Now, the daily chart on gold is a little bit more range bound, so you can see that on the daily chart we do have this range. A lot of headline risk recently, and that is probably going to continue into today. So the daily chart is not really giving me many clues. We've had a little liquidity grab here and then straight into the range. So until that resolves, the daily chart is not that useful. All right, moving on to the 4-hour time frame, where it becomes a little bit more obvious what Asia was doing. But today Asia was fairly muted, just sideways activity, not really much to glean from that. Maybe you can call this an accumulation if you are a Wyckoff follower, which is just basically market structures that are, super basic. This could turn into a bigger move upside at some point. Doesn't mean it's going to be today, but usually any kind of accumulation is more likely to turn into a markup rather than a further reaccumulation and then, keeps going. But again, anything can happen. The markets are very fluid, and they remain that way even today, especially with any sort of news that might hit us at any point, right? So that's been a huge challenge. Having said that, I have enjoyed the wider ranges. So even if we're in a range bound situation, the range is so big that I can find some really nice trades based off the developing value. We'll get into that in a minute. But again, if I look at the drop on a 4-hour time frame from yesterday, if we do start to rise up through this little single print drop, there is a very good chance that we rotate back up to 48.37. So at this point, I like to drop down to a 30-minute time frame and to have a look at how the options are positioned. So I'm going to switch on my intraday levels here. And the very first step is to see what the Asia did, right? What the Asia session did. And you can see that we're above Tokyo high. Now I've noticed gold likes doing this. It sort of does these like fake out breakout above the Asia range. However, during the overlap, they tend to pull it back to the range, and then the real move becomes a little bit more obvious. So I wouldn't trust this too much at the moment, even though the higher time frames are, looking more on the bullish side. But I'm at the moment not reading too much into this because it's a little bit of a wrong time of day to be looking for any kind of breakouts that might sustain for the entire day. And with the Asia session not really having any sort of a direction to it, I would be kind of careful with this situation personally, because we still have to live through COMEX, and we have to live through the initial balance of COMEX, which is traditionally very, very, how would I call it, directionless, I suppose. And then after that gets all shaken out, you tend to see the real intention. But yeah, sometimes there is a little fade into COMEX during this time of the day, so maybe there's something to it. But for now, I'm just looking at the options levels. So they went through the 4750, which was a weaker call wall, but it was also the orientation for the Tokyo session. To the downside, I think they narrowly missed the downside level. Let me just have a look at it. Yeah, so we had some chop zone, kind of like smaller areas that usually are not super interesting, but they can create some support, at least temporarily. And those two levels were located at 47.35 and 47.30. Now, unsurprisingly, that is exactly where the initial balance for London was created, in between those 2 points. But to the downside, if I look at what awaits as an anchor point, I don't really have too much until we reach 4700. Now to the upside, if it carries on, there's an interesting level just underneath the London value low from yesterday, right around 4800, maybe a little bit higher than that. Let's say 4807 is the London value low. And if this thing starts moving into some kind of a mean reversion upside, which can also happen, that could be a pretty decent target. So that is all the way up here. So fairly massive move. This movement would really need to be completed before COMEX hits, because it is a London-based level. If it doesn't, then we have the volatility of COMEX initial balance to tackle, and that gets a little annoying to hold trades through that. So therefore, I very rarely hold any kind of overlap trades into the actual COMEX open and past it until I live through the whole head fake of the COMEX initial balance that usually happens in the first 30 minutes. And then I kind of re-examine what's happening, reset, and then I find another different trade. So that's gold for you. The ranges are still very, very far away, so the average ranges are way out. So we have, obviously increased volatility over the last several weeks, and that was reflected in the ranges. However, we do have the implied volatility falling, which means that the volatility is not as insane as it has been. However, the ATRs intraday are still absolutely massive. Do I think that we can get up to 4900, where the average daily range high is located? Maybe, but we would need some kind of a catalyst, news or something to hit, and then they would have the driver to take it higher. But in the near term, I am looking at 4800 to the upside as some kind of a stopping point. That was also a pretty decent level yesterday during this session, so it will kind of make sense if they want to go back there. But gold has been a little bit tricky with the wickiness since intra-candles, so I have been kind of using alternative products over gold, because we still have those correlations that are all over the place, between crude oil, gold, ES, and even copper, you know, they're all like still reasonably well correlated. Now at the moment on a 30-minute time frame, I'm seeing that the correlation between ES and GC has kind of broken down a little bit. Now we saw this again yesterday. Look at it. So we saw this is the correlation quotient. Same thing, right? They dipped into the negative, slight negative correlation, but as soon as COMEX began, they drove it right back into positive correlation. So I'm using that piece of data to just say that there's a very good chance that something similar will happen today. But we'll see, right? It's just a hypothesis. Nothing too much to bang your head about. Right, let's move on to copper, where I do have a little long trade happening. So same thing, we're going to start on the weekly time frame and expand this just to have a look at how different it is. All right, another thing I'm going to do here is to place the visible range volume profile, because what I'm trying to explain here is a little bit more obvious by looking at the volume profile that's on the larger time frame. So all of this area where we rose up, it's a low volume node, right? It's like a little cave, and they filled it, so it dropped straight down, and then pretty much immediately they started reversing it, so we haven't been back. We are now migrating into an area of high congestion, and you're seeing the point of control from this entire bunched up movement sitting right at 584.60. So it's a little bit different than gold, where gold has enough space to go up into some very nice looking supplies. Copper not so much, but that doesn't mean that it won't kind of follow copper and that we can't find some smaller intraday trades that would still speak to the bullish nature of this movement and into the problem area. Once we hit the problem area, that's probably going to get a little bit harder to trade, because you know you get a lot of ups and downs, push pull, a lot of failed auctions, fake outs, range days, and then they sort of drive it wherever they want to. But for now, we're still a little ways away from the really thick volume, high volume node, and until that clears out, and until we get some more smoother candles that are not overlapping for half an age or millennia, then we can maybe turn back into some more trending movements and the like. All right, yesterday's daily candle pretty strong, creating a good higher high with a very small wick, but same problem, right? We're coming into an area of high congestion. So for me, this is all just going to be intraday setups that don't last too long, and I will probably be sticking to maximum 2R multiples on my products, but also I will not shy away from taking 1.5, 1.3 Rs if they do present themselves. So, you know, 2R space is available for just purely from looking at this daily time frame where the next available supply is, which is kind of this particular move here. That's where the biggest drop came from, and that is where we are kind of seeing a little bit of an intraday reaction to the downside. All right, what do we have on the 4 hour? Oh God, I sound like Hogue there. All right. What do we have on the 4 hour time frame? 4 hour time frame to me looks a bit bull flaggy. Now, on commodities, the bull flags are not nearly as juicy as they are on something like equity indices, primarily because most times commodities, especially copper, they don't have a well-defined trend, right? If there is a trend, then bear and bull flags work perfectly. So I don't know whether this would be, you know, something to put any weight on, and it's just an interesting sort of structure to consider. Might be a bull flag, right? So it might speak to that bullish nature of the overall higher time frame outlook, and that's pretty much it. You know, we did have a reaction to news that created a little gap, a little hole, little cave on the volume profile, and we're testing that now. So on the first try, statistically, those kind of caves tend to give a bounce in the opposite direction, and then as soon as they are tested twice, 3 times, 4 times, they eventually start breaking down, and then you see a nice move through them. Of course, not always, that's something that happens more often than not. But yes, of course, you can see a complete slice backwards through the low volume area as well, just not as frequently as the test and then a reversal from the single print, which is what this is, right? Okay, let's move into some intraday levels here. You see me in a long here. I will explain that in a minute. But when I looked at the whole options chain, really didn't move that much, frankly. The same levels are on, but they kind of changed the intention behind them. So this area here was a weak call wall yesterday. Today, that's where the puts are located. And that is also where the Tokyo low was prior. Now we've popped that, and the reason why I'm in this trade, I'm going to show you in a 5-minute time frame because you can see it a little bit better, is because at the time of the pop we had a nice little sweep which created the biggest volume candle to the downside and then bounced up from there. So this is something that I look for mean reversion trades, where you have an Asia low and then they kind of pop right underneath it. Ideally, you want to have some sort of an options level as well, and we do have this weak put wall at 570. So my trade here is purely technical, right? Purely technical because of the sweep and the highest volume bar on the 5-minute time frame that we've seen just not too long ago. So yeah, and now I'm expecting a rotation higher through the Tokyo range. If that doesn't happen, that's absolutely fine. But this is the trade that I will take any day, every day, whenever it shows up. When I look at the London-based values, let's see. We are opening below value, and we did have a little reversal from the value low. So let me just place that on this chart so that we know what we're looking at. Just give me a minute. Okay, we need volume profile fixed range, find 8 a.m. from yesterday. Yesterday, there it is. Okay, let's just remove some of these so that they're not cluttering up on the place. All right, so this is the London session. I will drag it only up to roughly COMEX open. So you can now see that we have this box, the rectangle, where the London value low is located. Now, this was a little bit too early for me because I just literally woke up and then I have to give the Cavalier meds, and then I have to give myself meds, and it just takes a hell of a lot of time, so I couldn't really jump on it. But this was a high probability trade of opening below the London value, touching the value low, and then immediately reversing. That was a very nice move, and if we're going to have a look at where Tokyo high is, that is not too far from this moderate call wall at 575. But if we do see a movement back towards that level, because of that bullish nature of the larger time frames, I wouldn't be surprised to see a value acceptance and then a further rotation. Now, COMEX value entirely different. COMEX value is actually currently being currently located right at the 575 level. So quite a bit higher than the London value, right? And because of that, it might offer an even better opportunity for, a test of that value. But the same thing applies. If they accept value with the bullish sentiment, then it's going to go even higher, right? It's going to probably go at least to 577. And if that is news driven, I wouldn't be surprised to see copper all the way back up to 580, which is the next sort of moderate call level, and a nice sort of extension into that congested area on the daily and weekly charts. But we'll see. That's a bit of an aggressive target, so I'm not going to be running the trade where I'm looking for 580 today. But it's certainly something to keep in mind as we head into tomorrow, so the final day of the week. Until then, all I'm doing here is just looking for some movement through this Tokyo range that we have. So we are seeing a little bit of movement now. If I look at the correlation between gold and copper, it is quite meh. It's minus 0.5, so not too much help there, which means that whatever gold is doing, copper is probably not going to be reactive to that just yet, which could change the closer we get to COMEX. Now, we just had the LME opening, so about 10 minutes ago, so we can see how they behave into the first sort of half an hour of LME. And until then, we just have to sit and wait. So yeah. Now, one option here that I'm seeing is a possible problem is that we run into VWAP and that acts as a resistance. Because remember, we do have this value low reversal from the London session. And if that is still the case, if we have, a bearish sentiment, that would mean that VWAP rejection would be another hypothesis as an alternative to this mean reversion. And in that case, you won't see the mean reversion, but in fact, you're going to see something that I like to refer to as weeb, setup weakness inside initial balance, where you hit sort of roughly 50% of London initial balance and then it just carries on down. And in that case, you should see the market keep going lower past this 570 weaker put wall. On the downside, we have 560 now, also another weak put wall. The gamma wall is all the way at 550 again, that's not changed. And then to the upside, we also have a pretty strong level at 590. All of that is like super far away, so I don't think it's particularly relevant for us today. But again, maybe something to have a look at for next week as your weekly plan. All right, so that is copper for you. Let's have a look at our friend crude oil. Now, crude oil is pretty interesting to me. They are kind of resisting this whole drop. We're trying to go into the single print. Don't know whether there's any news here. Maybe something just hit. Let's just cross-check to see. Don't really see any red news here. Hormuz is not open, access is restricted. Okay, well that's not great, so that will be a little bit bullish for crude. Now yesterday we had the inventories for crude oil and we did kind of react to it, but not really. It was like all jammed up in a very big range of like 330 ticks. And I did do pretty well yesterday, so I was up 800. You're watching group coaching, I locked up my account right after that session, after that segment, and yeah, so we're gonna see what they want to do with crude oil. Headline risk, still a huge issue, right? So tape bombs all over the place. If I do trade crude oil today, it is going to be still with like 1 or 2 micros, maybe 3 if we get a smoother movement. But I'm still sticking to my idea of pretty wide stops on crude and starting with 1 micro and then adding or taking away as the market moves. But generally trying to get like a core position of 2 at some point. So what do we have in light of the value areas? But let's have a look at the NYMEX value because that's going to be more interesting. NYMEX value high from yesterday is sitting at 96.38, the way I calculated, and then we have the value low down at 94.18, which is also where the settlement is from yesterday. So maybe some value in having a value acceptance special situation to the downside. It's somewhere in your hypotheses, just in case that they don't manage to reverse higher. But I do have, like, I didn't put all of these jammed up levels here, so I need to do that because this breakout into this area, I am not expecting it to be super smooth, and it has some room up to 101 where the gamma wall is, but there is another level here at 99.50, which is kind of a weaker call wall. So all of that is creating one big chop zone for me. So one way to approach this would quite potentially be looking at, maybe a wick above it. and then quite potentially a range that sets up between 98 and 99.50 or thereabouts. Remember, every level that I'm calling out is like a zone. It's not like, oh yeah, 99.50, let's go. They could whip it upwards to 101, but ultimately it fails and comes back down below 99.50. So to me, in my eyes, the way I look at the options chain is that they couldn't sustain above this entire chop zone, and at that point it kind of becomes game for my more rotational setups that I take off of the developing value that we start getting at that time. Now, developing value is an ever-changing thing throughout the day, so with every 30 minutes they will recalculate. And you have to kind of wait for the structure to start forming inside it, but it's also a range trade. So for that purpose, I like to look at where the value high is located. Right now it's pretty far down, so there's no setup here. However, if we start spending time in this area and we don't just kind of start smoothly going higher than 99.50, if it's just like a spike above and then a reversal, that's still not quite good enough for me. For a range trade, I would need it to spend time so that the developing value can catch up, and then I have a reference point to run some kind of a rotational trade. If I miss that one, in that case, I would be looking for longs off of the value low, again, developing value low, which at that point should migrate much higher. So again, giving me another reference. So that's kind of how I approach range days. I definitely use a lot of profile to position myself. As it stands right now, I don't have a setup on crude oil. I do think that they are still kind of smashing us with some minor news that is causing crude oil to react pretty heavily. So I'm going to wait and see what the hell they want to do here. When it comes to the current London extension, so we do have a clean extension to the upside from the London initial balance. So the London initial balance was so this one, so 98.11, and ballpark 97 as the IB low. So obviously we're quite far up. But what tends to happen statistically inside the period between now and NYMEX Open, which is at 9 a.m. Central, 2 p.m. GMT, or BST, because we're in the British summertime at the moment, is to see a pretty decent reversal. So that's kind of what I'm going to be hunting for in crude oil. Don't know whether we're going to get it, but I'm certainly keeping my eyes open just in case we see that. One thing that's interesting is that yesterday 100 evens was the gamma wall. Today that's actually moved higher to 101. So does that tell us that maybe the market participants and dealers are a little bit more bullish and doubtful that the ceasefire is really on? If that's the case, then I'm going to have to change my hypothesis to something else that speaks to longs. But for now, I'm also in the camp of doubting everything that I'm seeing. And if there's a tape bomb, so be it. But again, wide stops, tiny size, and trying to get anywhere from about 160 to 250 bucks of trade. So still, looking for a decent amount of ticks, because that's like 150 to 200 ticks. But not really going in with any sort of size, because I don't want to jeopardize the work that I've done on this XFA, and I want to be mindful that if I do get stuck in a tape bomb to the opposite side, that it doesn't hurt any kind of P&L. Alright, so that kind of concludes this somewhat boring part of looking at levels and how I'm seeing things today. Let's have a look at who's in chat and say hi to people. So Alexander is saying good morning, good morning, good morning. Raphael is here every morning, very commendable. Beach and Snow also here. What is the crime? We've got Yanni, Zahir, Mo Avery has joined us too. Has a question. Good morning, Dee. Would you trade a range-bound market that has been that way for a few hours? Let's look at silver, for example. Let's look at silver. I don't think you can trade silver at the moment on Topstep because it's a way too big of a thing. So here's the thing. I would consider trading a range in the first sort of couple of hours of the London session. At the moment, we're getting into a really tricky period of effectively 18 minutes before COMEX opens. And that means the expansion of volatility, some irrational movement, spikiness all over the place. So that range idea is good for when we know that statistically silver, gold, and copper have ranges, which is usually in the beginning 2 hours of London. Over 70% of the time, maybe even 80%, you do see a very evenly distributed movement for the first 2 hours whenever London opens, and that's because there's nothing much happening in the metals for that time of day. Right now, we just had the LME opening, but LME does nothing for the precious metals. They used to trade them, but that kind of stopped in 2022. So the LME open only really affects something like copper, which we can trade here, but also aluminium and lead and, you know, a whole bunch of weird industrial metals that we cannot trade with Topstep at the moment. Now, like I said, a range trade at this time of day on any metal is tricky. It's not to say that it won't work, but the probabilities are highly, highly sketchy. This is the time of day when they start to really make a decision of what they want to do pre-COMEX, and you don't want to get caught up in that. With the news coming up left, right, and center, that is actually pretty dangerous, and silver is a very big contract. If I measure how much we've moved, it's 141 ticks during the London session, and that is immediately $705 of risk for this kind of movement. And, you know, how do you run that? Do you nitpick on stop losses? Honestly, I really wouldn't, because I think that silver, when you look at how it starts to move, when it does move, you will see that the range that we have right now is nothing. Is absolutely nothing. So when silver really starts moving, as we get closer to COMEX, any kind of nitpicking of stops, like for example using a 35 tick stop, you're not going to survive anything with that, right? And if you do, it's going to be more a matter of luck and a super awesome trade location, which is very difficult to execute in reality. Why? Because silver is still very spiky, and even though the volatility has fallen significantly, once COMEX kicks in, everything starts going nuts. All you need is just one piece of news, and you will be staring at slippage like you haven't seen ever, right? So because, you know, silver is very thin. It's very thin, and it becomes even thinner during tape bombs. So even though this is like sim accounts and stuff, they still try and simulate the slippage. So you cannot guarantee that your stops will be executed where you want them to be executed, right? So there's a whole bunch of risk. And on top of that, micro silver is not a true micro. It is a $5 per tick kind of product. I would argue that unless you have a true buffer of about $22,000 in your XFA, that you shouldn't even consider touching silver with a barge pole, right? It's super dangerous. Like, your risk of ruin is super high. So those are my thoughts. That's why I didn't really cover silver that much, and I didn't really look at it to any kind of detail because it's not really on my radar for today. We can go through the levels quickly. So let's have a look. Let me just grab my charting platform. Alright, so not too much change in the levels. So we have 75, which was a moderate put wall. It is now a weak call wall. So that's the change. And then to the upside, we have 76, which is also weak, 77. Yeah, and then to the downside, 72.50 is a new one. It is a very flimsy level, but because it's so far away to the downside, and because the Tokyo low is not too far, there is a tiny chance that there's some interest there as the day progresses. And what's interesting is that strike has quite a high implied volatility. So it's like not only is it like it's tiny, but there's something off there. That's kind of one of the things that I look for. So it's not necessarily just the open interest. I have other ways of coming up with the levels that might be interesting. Gamma Ball is still at 70. That has not moved for a while. And yeah, so nothing else of interest. But a similar situation to gold, except gold is a little bit stronger than silver. So silver did not even pop the London initial balance. They've just rotated into it. Nothing really much to back the movement. This is just barcoding to me. So I would want to see some more movement outside of this range rather than torturing myself in a tiny range. Compared to the volatility of this product, I would want to see some shakeouts. And maybe if they establish a bigger range, maybe that is something to have a look at. But yeah, so silver to me, very sketchy today. I think we have some better products that we can focus our attention to. All right, let's have a look. Going back to the chat. Is Topstep support sleeping right now? I literally passed 2 evals and got 1 express funded and the second one isn't activated. I don't know, mate. I'm not support. I'm just an on-air person. So, you know, trader just like you. Like if I need something, I would probably have to reach out to support as well. I don't have admin access. I wish I could help you, but that is way outside of my remit. Okay. So hopefully that's not too disappointing for you, but I think that a lot of people think that just because we're on air that we are some kind of support people. Like, you know, we're not. We wish that you know, I wish that I could have a look at your account and see what happens, but I just don't have that power. So I'm afraid you're going to have to wait for support to come back to you on that. And they are probably sleeping. I don't know whether Topstep has 24/7 support. So yeah, until they wake up, you're probably going to have to wait a little bit for the resolution. And I do apologize, I can't help more. I wish I could. Considering I have wide stops, what is my average expected risk reward? So that will vary. If we have some more trending markets, my risk reward tends to be overall somewhere closer to 2R, 2.3R at the best of times when it's like really favorable for trending markets. But when we don't have trending markets and when it's all push-pull on most days, then I will stick to about 1.3, 1.2 as an average risk reward. Now, of course, some of the trades will still go to 2R, but for the majority of them, I will be taking them off early, which kind of reduces the RR, but it, RR, are there any pirates in here? But it also increases the accuracy. So whenever I have 1.3R, typically I'm sitting around 61-62% accuracy. Whenever I have higher risk reward, typically I'm sitting around 48-50% accuracy. I don't know how that helps you, but there you go. That's and you know, I have shown stats here many times before. John Hoagland has joined us. Good morning, John. Good morning, John. Let's see. Mo also says, appreciate the detailed explanation as always. Thanks, D. I traded it for the first time last night, got lucky, but I can see how risky it can be. Yeah, so be very, very careful of silver. Beach and snow. Morning, D. I passed my very first combine today. Everybody, I wish I had one of those soundboards that Eddie used to have, so I'm just going to give you like an applause. Well done. Well done. Now, really take it slow in the XFA. The first objective is not get a payout as quick as possible, 5 days. No, the first objective is keep the XFA. So, you know, super small size to get used to the additional pressure that most people feel, because now there's no going back. Well, there is going back, but it's going to cost you a lot from back to funded. Or if you do lose it, then you have to start the whole process again. Not the end of the world. It is a normal process that everybody goes through. But yeah, do try to give yourself the best chance. Go through your stats, just see, you know, which hour of the day works best for you. So try and focus on that. Maybe go a little bit deeper into what worked for you during the combine, and don't change it too much. You know, if you were, obviously change it if you were full porting in the combine and you happen to pass it, but I'm kind of hoping that's not the case, and that you kind of took your time and, you know, spent at least like 2 weeks to a month to pass a combine, and if it was any longer, that kind of approach to combines, treating them exactly as you will the future XFAs, especially if you're a slightly less experienced trader, that's the best way, right? I know that some people on Twitter, where you have nothing but profitability, which is staggeringly surprising, considering that there's a 97% failure rate in trading, and yet somehow on Twitter that just doesn't seem the case, right? Everybody's a Paul Tudor Jones, Paul Tudor Jones, everywhere, wherever you look on Twitter. I've seen many people, probably speaking from their experience, I don't spend too much time in combines. Listen, if you're an advanced trader, yeah, I agree, right? You don't have to spend time in combines. But if you've never passed a combine, that's an entirely different journey, right? And you have to spend time to see what works for you, what doesn't work for you. Can you even reach a target in a combine or not? And if it takes you 9 months to pass a combine, I would argue that you're either using a combine that's too large for a skill set, or the profits that you're generating, the alpha that you're generating, is not really suitable for props. So something needs to change, right? Either go for larger targets. I never want to say go for larger size, because that is one way to blow up, especially when you start to make some mistakes and executions are not 100%, and you balls it up on the exits and stuff because you get afraid, or there's a tape bomb and something happens. You have to allow yourself to trade with size that will allow you to make mistakes. Nobody is perfect. Muppet moments should be a part of the plan. Expect that things won't go correctly, right? Expect that you will have a few mess ups, and that is perfectly okay. That there's nothing to be ashamed of. It's normal. And that even if you execute a trade perfectly, it still may not work. And that's, again, not a mistake. It's just the probabilities that are not working today. So just take it slow. And yeah, if you are not successful in the first try, not the end of the world, but do learn from that experience. However, I'm hoping that, you being here and listening to me yap on about risk and low size, trade location, gamma levels, orientation points, waiting for more decent setups, finding the situational awareness, and figuring out whether there is something there for a more trending type move, whether it's a mean reversion or more sustained auction kind of momentum side of things, or whether we are in a range, and whether you maybe need to look at approaching things from like maybe liquidity sweeps and then a failure, or failed auctions, or whatever form your range trading might take. But yeah, just take it slow and take it easy, and keep us all posted what's going on. Looking forward to seeing your journey continue. And I see that Beach and Snow has been watching Project Hail Mary, saying amaze, amaze, amaze. So for those of you who know, I'm just going to say thumbs down, amaze, amaze, amaze. And now people will be going, what? Thumbs down? What? But if you haven't seen the movie, you're very confused. If you've seen the movie, you know what that's all about. So yeah. I'm obsessed with Rocky, by the way. Totally obsessed. Alright, let's have a look. Any chances Topstep allows swing trading in the future? Also, I know when you started, you were a swing trader. Can you talk about the pros and cons? Sure. XX Mints 777 XX. That particular feature, they tried it. I think maybe John can remind me, but I think they tried it somewhere in was it 2019, 2020? It was in and around COVID, a couple of years here and there. And it wasn't super popular. Swing trading in theory is kind of easier, but you have a lot of traders who are maybe better off being intraday traders, and then when the intraday trade would fail, they would kind of keep it on overnight. So that is not really how swing trading should be done. Whenever I'm planning a swing trade, that will be some kind of an option these days, because I don't like doing outright swing trading on outright futures, so I like to control my risk on swings in a little bit of a better, different not better, but different way. And that's purely me. But in the beginning, I did trade Forex, and for the first 5 years, all I've done was just like swing trading on the daily and 4-hour time frame. I did exceptionally well, and then Forex kind of died on me because there was that European austerity thing that happened when Greece went bust. And for a while in the beginning, like the first 2 months, the moves were excellent, and then everything just died. That is what pushed me into intraday, because I realized that my skills in intraday left a lot to be desired, and I tried for a year by myself and I couldn't really get anywhere. So in my eyes, swing trading is easier if you're focusing on larger time frames. I don't think that Topstep is going to bring back swing trading. Having said that, if you're in a live account and if you talk a good game and if you can back up some data behind why you will be allowed to do swing trading, they will consider, the risk team, they will consider letting you run an overnight swing. Now, I used to work for a company that allowed you overnight swings, but because of the margins being much bigger for overnight trading and for carrying positions into the next session, you needed to be in with like a third of the size. Now, obviously, if you're running a swing just on one contract and you want to cut it for intraday for the overnight margin, that is not possible. So that wouldn't be very wise. But maybe if you're in micros and you're in like 10 micros and you can cut that down to like a third, maybe they would allow you to do that. And so I don't know. So swing trading is entirely different. Mixing and matching is kind of like apples and oranges to me. People who are swing traders are traditionally not well equipped to deal with the intraday whipsaws as well, because they don't largely care. The stop losses are bigger, and then any kind of shenanigans that you get intraday, it doesn't really affect you that much, because presumably you're taking your setups from a much larger time frame, and just by default your stops will be bigger, right? So from that perspective, I think that whoever, and I've seen, we've had a couple of people on, and one of them was on with me and Jay, long time ago at this point. I think it was, 18 months ago, 2 years ago. They brought on a guy who came on talking a big game. He was so confident. He was talking about his levels and, this and that, and everybody's like, wow, he's amazing. But then we came to the actual trade execution, and I'm like, okay, well, what are you seeing today? And both Jay and me were like trying to push him into a trade idea, and he's like, well, no, I just don't trade today. And I'm like, okay, so you don't think that maybe a liquidity grab and stop run and reverse from the Tokyo area might be something to consider? No, because my level is like all the way down, like million ticks below. So I won't trade until that level comes. So the whole thing came out really weird because, we were trying to be what we do best, right? Being coaches and trying to make him improve. And one of the reasons why he wanted to come on and ask a whole bunch of questions is because he was trading like twice a month and couldn't pass combines. And yet he comes on like with his big game. It's like, yeah. And then says, well, I'm not trading until my level is reached. So it's like, well, you'll never, this is not for prop trading then, this will never work. So we tried to help him, but he was super resistant to it. And he said he wanted help, but I don't think so. Some people are just not coachable, right? So, if you're somebody who's been a swing trader and you can't find an intraday trade that works properly, that means your skills are not there yet, right? So that doesn't mean that they won't be there, but you do need to work on developing a little bit more awareness of how the price discovery works in Asia. What happens statistically, and at what parts of the day do those Asia levels get reached? Most of the time they will be swiped and then there's a reversal. So for example, that's one very simple intraday measure on metals that you can use with decent accuracy. And then similarly, if we do get a new overnight low like we're doing on copper right now, this overnight low then becomes something to swipe for after COMEX initial balance is finished. And then I might be looking at a scale in on the basis of if I'm still in that, although I probably won't be. But if this one doesn't do what it's supposed to do in this overlap, then the new low that we've made during London becomes the entire overnight low. And then the same thing applies, just only later in the day. Swipes below that and a prompt reversal. So you're basically looking at fake outs. But, you know, if you don't know how to look at the intraday events in a more critical way and in a more zoomed in way, then, you know, intraday trading is going to be pretty much elusive. So this is where the intricacies lie. And then the intraday traders who want to do swing trading have the opposite problem. They typically, especially if you're more on the scalper side, your trade locations typically are not strong enough to withstand movements that will last. And that's a trade location issue. So I'm not saying, oh yeah, you know, scalpers, blah, blah, whatever. No, you can scalp, but just know that if you're trying to scalp and then turn that into a swing trade, that's not going to be possible. Most times the reasons why people can't stay in for, like I also see posts of people saying, you know, when I lowered my risk reward to 1-to-1, suddenly I became profitable. Yeah, because your trade location sucked. Like, let's not, you know, let's be completely honest here, right? So you can't turn a scalp, which comes from like middle of the range or some random swipe of a high on an intraday time frame, but that is actually at the bottom of the entire swing on the daily chart, for example. That's never going to be a swing trade of a continuation because you're coming into a swing extreme to the downside. So therefore now, from a larger time frame, the swings are naturally skewed to go back where they came from. Of course, there's a whole bunch of stuff about it. There's a supply and demand quality. How did we arrive to a level? You know, is it just a clean drop, or did it kind of stutter and then drop some more? You know, all of that will come into that sort of analysis. But, you know, just to state, you know, make a blanket statement how, you know, anyone who looks for a larger risk reward is not profitable. I disagree. If you're not profitable with a larger risk reward, it means that your trade locations are just not suitable for that. So get better at trade locations, and guess what? Suddenly those easy 2, 3, 4 trades, they will come, but they are not nearly as frequent as the little scalpy opportunities that we can have intraday. So does that make sense, right? Each style has its own challenges. And I will say that there are very few people in this world that are traders who can seamlessly change from scalper mode to swing trader, scalper mode, swing trader. I kind of sit in the middle. I'm not a scalper, and I'm fully aware that I'm not a scalper, but at the same time, I wouldn't call myself a swing trader either at this point. So I'm kind of like intraday swing trader. If there's no bigger trades available, I will scalp, but I won't scalp 10 ticks. I will scalp 100 ticks. So that's de-scalp, right? Where I'm looking for a bigger range to be established, usually in some sort of a form of, you know, failed auction into a neutral day. Means that it rotates all the way to the other side, creates basically a pull on both sides of the initial balance. Then you have that opportunity and probabilities in favor of a more range-bound day. But, you know, for me, I can recognize when there's time for a larger trade. And then I'm not going to, excuse my French, dick around with scalps, right? Because more money lies there with very little effort. So why would I scalp when I see a possibility for a good mean reversion that just goes? What, am I supposed to exit, eat up some commissions, then try again for a less good trade location? I'm not going to do that, right? So I will sit on that trade until the cows come home. But that took time to develop, right? And to recognize when the market conditions on the larger time frames and intraday open up the probabilities for such a movement. Okay? So yeah, swing trading and intraday trading, they're two different skill sets. Very few people can shift seamlessly between them. All right, so yeah, pros and cons of swing trading. Well, swing trading, is it a pro? You can get more ticks if you identify a good opportunity, and you don't have to manage those positions terribly, and you can keep them for a long time. That could be a con for some people because they don't hold trades, or they can't hold trades. So every time there's like a squiggle back the opposite way, they might close it. But then the intraday cons, let's say, it's the fact that any mistake and inconsistency that you have in your trading, it's super sensitive to those, right? So if you change your position size too much, if your stop loss shifts all the time because of the structure, but you don't shift your position size, you will be, for example, let's go practically. If you are, like, let's say I'm doing a 2 micro trade on this copper, right? And my stop loss is 55. But let's also say that I decide to put my stop loss closer after this additional wick that we've had, and now I'm technically looking at a smaller stop loss, and then I start to project my risk reward based on that smaller stop loss. So that one reaches 2R, but then the next trade I still enter with 55 ticks initial stop, and that one gets stopped out. So where am I on the P&L side? Most of the profits from the other one are going to be wiped out. Maybe not all of it, but 3/4 of it is going to be gone. So what's that? That's 1 step forward, 2 steps back. In the way I look at the risk models, I want to go 2 steps forward, maybe 1 step back, 3 steps forward, 2 steps back. So to keep like pushing the curve as much as I can in the right direction, right? Not going all that work, doing amazing trades, and then you F it up, and then suddenly you have no profits to show for, or a blown account, which is what we see a lot here. We see people do so much work for like 2 weeks, 3 weeks, and then everything goes in one day. Why? Because they oversized, so inconsistency on position sizing, and sometimes they move stops, whether they move it to break even too soon, then that gets knocked out, but the trade is still valid, so they re-enter. Now it's a crappier trade location, and then that one loses a full stop loss. So now what? Now you've overmanaged everything. So instead of that setup being 1 trade, now you've already done 2, 3 trades around the same trading idea and dug a nice little hole because you wanted to protect the position. So that is a challenge, obviously, for everyone. But for me, I just look at it from the point of that's emotional trading, right? That's not data driven. That's nothing. That's just like you clicking buttons and moving stops willy-nilly. Not really looking at MAE, for example, maximum adverse excursion. If you're in a trade, how much adverse excursion can you actually handle? Not you, but how much the product normally goes against its own movement in a particular swing. How much usually, right? If you don't know that number, it's actually a great number to know for any sort of an idea where you should put your trailing stops. Ideally outside of that. So when it starts to move against you, you have to make sure that the trailing stop is way outside of that so that your entry is already safe. And therefore, if it goes into an MAE, that you can put your stop to break even and still not be statistically in danger of a swing coming in and taking you out before it turns back in your favor. Does that make sense? So those MAE, MFE, maximum favorable excursion, same thing with adding. So what is the favorable excursion? How much it goes into a single direction before it starts to pull back. This is just purely looking at price action, right? How many swings do we have? What is the size of those swings? And then once you identify the maximum favorable excursion, if you're somebody who likes to add into trades, what's going to happen if it goes to MFE and you add? Well, you're going to stop for a drawdown. Why? Because that's where it turns around, usually, statistically. So staying away from those kind of areas is, I would say, very, very important intraday. But, we get into some fairly highly skilled level of not just looking for setup and clicking a button, but actually examining the quality of the entire trade. So, those are just like some of the things that I look at whenever I'm assessing anyone and how they trade. And most people won't be even able to tell me what the MFE and MAE are on their products. So, do some research, get some tick data from somewhere, And, you can use AI to help you, but you will need a CSV file with tick data or something. All right, so Dow says there are still some streamers. There are still some streamers who full port every trade and call blown accounts business expenses. Yeah, I have a little bit of beef with that. And I have actually been told by some people in my community, I was told that it's okay to blow up evals, so basically get to a funded account however you can. But most people then go, well, now what? Because now I got myself used to blowing up evals and doing full porting and stupid things. Sometimes it works. And now I don't have any skills that will actually help me maintain the accounts. How is that useful, right? And again, it comes down to, is this streamer somebody who's extremely experienced? But if they're experienced, they are probably on chapter 20 of their trading journey. But somebody who's on chapter 1 and maybe doesn't want to blow up 1 million evals to actually get to a funded account and maybe a payout, they're in a completely different situation, and that's very detrimental. I'm heavily against that. Blown evals can be business expenses if you've done everything in your power to make sure you don't blow up. And you can blow up 5 evals, fine, but once you get to a 6th and 7th one, don't you just ask yourself, hold on a minute, is there a less painful, less expensive way for me to do this? And also novice traders who immediately go for multiple accounts. Maximum funding. What do you need maximum funding for when you're not going to survive for like a week? So what you've got there is maximum costs, right? How about we think about it from the worst case scenario? What if you lose all of them? No payout, no nothing. I know it sounds grim, but being a realist when it comes to your risk model, that is what will keep you alive. Not wishful thinking and trader math, right? I had a day where I made $2,000 in each of my XFAs. So that's 10 grand a day, times 5, times 20, times 200 days in a year. I'm going to be a millionaire. Classic case of trader math, right? So let's not do that. Let's go back the other way. So let's be a market stalker, right? And let's go, right, so what is the worst case scenario? How many days did I have losing streaks of? And when you look at losing streaks, you don't just have to look at your stats. You can look at, for example, you can only look at like the number of combines that you've blown. So did you blow 3 combines in the last 2 weeks? How many days did you have before blowing up? And what was the size of the blow up? All of that should come into consideration of how your trading skills are going. And if your trading skills are like 2 days, you do well, then you blow up an XFA. What's that? You can't survive the 3rd day with the way you trade, okay? If you've had, 4 good days, you get into an XFA, you have 1 bad day, 1 good day, 2 bad days, account gone, that's also something to consider, okay? So, you have to look at your P&L on a day-to-day basis as well. And this goes for everybody. It doesn't matter whether you're a scalper, semi-swing trader, holding trades, not holding trades. It doesn't matter. What do you do at the end of the day on a good day? And how does your bad day look? Does it wipe everything out? Well, then the math won't work. Because if you're able to only generate 2 days of a green streak, and then on the 3rd day you lose both days and then some, and the account is gone, that's not a positive risk reward on a day-to-day basis. And that's a problem. So whatever you do in your own trading, if you do 100 trades or you do 1 trade per day, at the end of the day, how are your positive days versus negative days? Can you even string along 3 days of green? Well, those cumulative 3 days can then quite possibly give you a slightly larger allowance for a daily loss limit. Now, my daily loss limits they're not set here, but they're set in my head. So whenever I have a losing day of like minus $2,000, for example, it happens occasionally, I immediately go back to 750 daily loss limit. But if I'm doing well, and if I've managed to go on some kind of a streak and managed to generate like $5,000 in a week, I release my daily loss limit to 1.7K. Okay, so it's like scalable. But then as soon as I end the green streak, so does the daily loss limit reset back to 750. So it's like a scalable daily loss limit, right? And yet most people will be holding on to like just one single daily loss limit. It's like, well, it's great, but you need to reward yourself with more leash if you are on a good streak and you're banking and you have some buffer in there. Yeah, absolutely. Try to give yourself, more room to generate more on the day, but just don't go crazy. Don't go from, using 1 micro to suddenly going back to trading 15-minute micros. That's too big of a change. Maybe add 1 for every $2,500 of buffer. Yeah, 1 micro. You heard me. So yeah. Beach and Snow says, I took 3 weeks to pass the combine. That's excellent. Also started a 150k practice account 2 weeks ago to see if scaling to 5 micros would work in that account. I'm up 6k, process working, taking slow. Okay, I would say don't do that. Scaling to 5 micros in a practice account means absolutely nothing because it's a practice account. At this point, you need to hone your skills in an actual funded account that has skin in the game, emotions, Muppet moments, and no going back, no resets. So right now, you're done with practice account. If you have something else to like a new strategy or something, you can go back and test that. But at this point, not in a practice account. You would actually do that in a combine as a proof of concept by passing the combine. Okay? So practice accounts at this point, once you're at the funded level, has to be an entirely different game. For me, I haven't used the practice account in forever. But whenever I'm testing maybe a new approach to scaling and whatever, I like to do it in a combine because there's like actual skin in the game and a target, whereas in a practice account there's nothing. So to me it like serves absolutely zero purpose. And also, how long can I survive in a combine on the new approach? But once that's done, typically for me it takes about a month and a half, depends on how big of a change it is. I'm then back to the funded level, and I know that what I've done there, it can work, but I still never push it. Like, for example, my tests for the combine on MHG were 4 micros, scale up to 8. Now, there are some restrictions, but then even then I was scaling up to 6. Am I going to be doing that in an XFA? Absolutely not. I start on 2, scaling to 4. The end. So half the size in the funded account. Now that still enables me to generate, anywhere between 700 to like 1.5k. But, there's like different ways of trading, right? I go for like slightly bigger targets when they occur. So that enables me to generate a little bit more cash than normal. All right, what's the time? Okay, we've got about 20 minutes. Am I risking 2 micros in MGC? No, this is copper. I'm not touching MGC. The risk on this, if you want to know, grand total of $137.50. That's the entire risk on this. But if I get anywhere near my target, that will put me on the day 275 just to start the day. And then if I get another trade that kind of pushes me over like sort of 400 or 500 mark, I may add in like 3 micros at some point. So 2 micros, add 1 towards the end of the day. Why? Because the way my setups work, the longer we get in the day, the probabilities of what should happen rise drastically because of the way I trade. If you watched group coaching last night, you will know the times of day that I mentioned, and that's why. Okay, I'm seeing crude oil building some structure here, right around that 99 level. So I'm just going to see what's happening on the tape. Okay, that looks right. And because I still don't have enough profits on the day and I'm in the copper trade, we're going to do one punt. So this is a punt trade just to see whether we can actually migrate back down into the value. And this is too much, so I'm gonna go to 98 because that's where we came from. Even though usually, and there's like VWAP there, but maybe 50% into IB would be a little bit more generous. If it really starts to fall, it should reach 50% of the initial balance, which is... Oops, didn't mean to move that. Didn't mean to move that. Okay, so let's go. Let's use and I don't know whether I've actually saved this, but I did. Yeah, okay, this will work. So what I'm gonna do here, I'm just gonna put a 0.5. Oops. 0.5. There we go. Just to kind of delineate 50% of the initial balance range there. So basically I'm looking for what I refer to as an auction fade. That is my concept from the Market Stalkers method. Back down to initial balance and then a little bit more because the stats support that. Now on my chart, the VWAP on the main contract is a little bit higher. It is at 98, so I need to watch that area or just take everything off if we ever get there. But this is now more choppy, so it does mean that we could just stay a little bit range bound here. And if the tape bomb hits us, it hits us, but the stop loss is super far away. So we might have a chance to exit. But yeah. I want to see a sustained movement below the low of this candle because this was a nice little attempt at a pullback. And we also have the developing value here. Just tagging that. So really if this is going to work, we need to tackle the 99, which is a mega call wall, and I'm gonna try and see whether this was all just one big wick through to the bottom, to the top of the chop zone. So we'll see whether the auction fade can shake us down, and if it doesn't, it's gonna be news. So for now, they're fighting. They're definitely fighting at 99. They're like boom, 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 boom. So we'll see who wins. There was certainly some institutional interest here. Let's have a look at the big contract. So you can see here at 99.20, 492 contracts were traded. And that's what I saw on the tape. They were like, we fight around 99.20. So until that resolves, I'm not going to know whether this is a... Oh, is that news? Are we getting tape bombed? Are we getting tape bombed? Tape bombs are fun. So that's why we're in with one. And we're just going to leave it. But there's certainly some movement here. Just gonna keep an eye on what gold is doing. Not that it's like terribly correlated today, because there was a negative correlation between GC and CL. Let's see what it's doing now. Yeah, so now it's more positive, but not terribly. It's not completely correlated. Just a little bit correlated. Alright, let's see if they can smack it back down again. 99.20, pain point. Let's have a look at the 5-minute time frame just for like the volume purposes. Yeah, I suppose this was the biggest volume. That's not telling me much. Back to the 30-minute. Now what I want is the cumulative delta to kind of swiftly come back off. And I don't want it to just smash down. I want it to be a little bit more orderly. Because if it smashes down, then it's not... It's just going to be a tape bomb. And I might still get the target. But it's just like, yeah. You know what? I'm going to keep my take profit here to 98. Because this is very spiky. We're getting some news now. Iran's president Pezeshkian, is it how you read that? Israeli strikes on Lebanon violate the ceasefire agreement. Well, yeah, but they're all like, whatever, mate. Because crude oil is selling off. The ceasefire proposal, somebody else is saying, Kalibov. Ceasefire proposal included Lebanon and the entire axis of resistance. Okay, a whole bunch of things went off there. Follow through. Does it follow through? Follow through. Do the opera singing whilst we're getting tape bombed. How does that sound? Oh, I'm not liking this. This is too spiky. Too spiky. Alright, you know what? I'm gonna close this. Because they're literally just like hitting us with attacks on Lebanon with these, and then 1, 2, 3, 4, like 4 different pieces of news. I don't want to trade that. Iran will not abandon Lebanese people. There's another one. Too tape bomby for me here, but yeah, we grabbed some $30 there. It's all right. I just I can't with the jumpiness. I can't think. So yeah. Do I have another professional activity beside trading and Topstep? Oh yes, I have a software development company. Our team frequently works for like boutique hedge funds, and they have done work for banking, like bulge bracket banks. Yeah, so we create custom tools as well for various platforms on the retail trading side. I used to have an IT recruitment business that went bust in and around COVID. So that wasn't great. But yeah, I have quite a few sources of income. I'm definitely one of those people who feels that to get wealthy, you really need to have multiple sources because it's quicker, you know. If you're only banking on like one thing, or just trading or just this job or just that, that's great. But just know that it's much easier to get wealthy with multiple things going for you. Not easy to create, but I grew up as a fairly in a fairly interesting environment where my dad was fairly wealthy, and he always said, just let it drip from a few sides. That was like a thing that he drilled inside me. And only one time I did decide to make trading like my life, and that was very psychologically difficult. I was doing well, but every time I would lose a trade, I would be like, oh my God, where's the mortgage coming from? Oh my God, what are the dogs going to eat? Oh my God, what are we going to eat? Oh my God, this is terrible. And it just affected me so much that I found it really, really heavy. But for a long time, I actually ran a parallel career of being a session musician and a trader. However, when I had to go into the office to start working for prop firms, obviously the session musician stuff just became not very, it wasn't logical for me. You know, I was like spending 3 days outside of the country to make half the amount of cash that I would make in a single half trade. You know, it wouldn't even have to work out terribly well, but it would be like, oh yeah, great. Okay, so this copper is starting to creep back into the Tokyo low range. And the closer we get, so this is pretty slow, right? Tokyo low is still fairly close. You know, I would like to see a bit more confidence there upon the return, but it's looking all right so far. We wicked below the 570 level, we returned, so now we just need to wait and see what happens. And at some point, as we get again closer to COMEX, I'm expecting copper to kind of correct itself the same way the other metals have done, and maybe it's going to catch up some of this move here. So I might actually leave it for a bit longer than I normally would, expecting the head fake for the COMEX IB. So if COMEX IB first 30 minutes goes up, then I will stay in. If it starts to drip back down, that is the head fake. And in that case, it's easier for me, it depends on where we are at that point, but it would be easier for me to just exit than try again after the head fake. So that would be like my plan for the copper trade. But might do a couple more of these crude oil trades, but for now this is like super spiky for me. So we just scalped a little bit, nothing much, mainly scratch. But it all goes into the same pot. And maybe once the tape settles down a little bit, we will also have a better reference, and the value area might actually compress a bit and start to look a bit more sane, because this is pretty spiky. Pretty spiky. Double distribution as well. Would you stop trading if you achieved 1,000 PNL for the day on 150k eval that is now basically 1.2k? Yes. If you're already up $1,000 and you've already got a buffer of 1.2k, oh, you're at a combine. Is that a combine or an XFA? Eval. Yes, it's a combine. Do you know what? $1,000 a day stopping, that will train you for the future XFA where you might be up $1,000 on the day. So rather than looking at it from the point of view of, ooh, it's just an eval, let me keep going because target, that's a pretty detrimental way to look at things. So that kind of thinking doesn't completely go away in the XFA, unfortunately. So applying good habits while you're doing the eval and stopping at $1,000, it means that you will be doing the same thing and getting used to doing the same thing in your XFA. Don't rush. Rushing through evals is what gets them blown up. You don't, just because you can't pass in 2 days, it doesn't mean you have to. And if you've not really passed evals with ease before, I would argue you need to spend time in an eval to get those good habits up to some sort of a level of almost autopilot. However, at the same time, I am against P&L based goals, okay? If you're like, oh, I'm so far away from target, let me keep going. From what target? In an XFA, you have no target, okay? So these targets in an eval play games with your mind. I never look at it, oh my God, I've got to reach the target. I'm like, well, is the setup there or not? And is the chart today even offering me anything? If yes, I will trade it. If no, I'll just leave it alone. And you know, some days in the morning, I'm up 400. Today, I'm up 91. You can't control how much the market is going to give you, right? You know, one day I might be down like $600, another day I might be up $2,000. But that's not because I'm chasing the $2,000. It's because the market conditions have enabled me to be there, to effectively take advantage of the largest swing that appeared. Does that make sense? So it makes no sense for me to go, today I sit here, I'm going to make $2,000. I used to think that. Don't get me wrong. I've done all the mistakes that you can ever imagine. I used to think that. I used to have dollar-based goals. And then in chasing the 2K or 3K or 4K, I would be up 1.6K, and then I'll be like, oh, just 400 more. And then you start forcing setups. By the end of that day, not only did I not make the $2,000, I was down $2,500. So just, you know, see whether there is a setup. If there is a setup, take it. But you're up $1,000. If you want to keep going, I would say cut the size way down. And then any future trade that you make, if it's profitable, it adds onto the pot. But if you lose it, and if you know, start not reading the market very well, the losses that you take are not going to be disastrously, you know, taking away all the hard work that you've done already to generate 1K on the day. And 1K on the day is amazing. Just imagine as if it's an XFA. Just imagine it. What would you stop if you made 1,000 on your XFA and you know that you can take a payout out of that after a few days? Because I know I would. I actually took a grand payout last night. You know. All right, we've got 5 minutes. Let's do some quick fire here. Catherine K says, I really struggle, as some people would say, let it go. I don't like being a scalper, but I get nervous and I pull out too early. I have a hard stop at 200, and I think that's why I'm having trouble. Yeah, So for these market conditions, a daily loss limit of 200. What are you trading, Catherine? Is it gold, MGC or something? If you have a 200 hard stop, you really have like 1 or 2 goes in MGC because of the ranges, right? So unless you find a super amazing setup, you just don't have enough space to trade something like gold in the current volatility with the stops that it requires on a 200 loss limit. But for example, let me see, MES might be better for you. MYM, if you're an equities trader. MYM, much cheaper. And yes, it does require bigger stops, but it's also 0.5 bucks a trade. And it's not as volatile as some of the other equities. So, you know. Do you scale in and out when I swing trade? No. So I swing trade through options. And even when I swing traded back in the day, it was all in, all out. Even if it didn't reach the full target that I intended, I would take all of it off. Do I add in an intraday trade if it's a mean reversion that I feel has more room, more profit margin, even though if I'm not, you know, for example, this copper trade. Technically, the profit margin is up to 580, right? But I'm not taking it at 580. I only want a chunk of it. So if I wanted to scale in, which is a bad time for it now, but let's say we're closer to the Euro close, the London close, and I have the similar setup. So overnight low takeout reversal on the account of bigger volume on a 5-minute time frame, I would be adding twice in, you know, an ideal situation. So I would add one at about now, 10 ticks. I would add another one at 18 ticks, and then that would be it. Now this one is a little bit tricky here because at 18 ticks we already have VWAP, so I probably wouldn't be adding there. So maybe just one add-on if we were closer to the London close. And if VWAP wasn't like just there, kind of sitting there as your biggest nightmare. But yeah, I like to add. I don't like to take away. So I've kind of changed things around this year. So I used to go in with one mini, then scale in a bit of a drawdown in a zone, kind of building a position in a zone, and then add the third mini as it starts moving in my favor. That would still work for intraday on my private accounts. Doesn't really bode that well for what I'm trying to achieve in prop, which is to minimize the drawdown, since I'm trading a little bit more aggressively. And I'm trying to minimize drawdown but maximize upside. Now I don't need to do that on any private accounts because the balances are bigger and any kind of loss that is achieved from that doesn't even touch anything. It's like 0.3%, right? But on prop, everything is vastly amplified. So you have, you know, small tight risk limits. You have, you know, the maximum loss limit, trailing drawdown. Okay, we've cleared that in this XFA. But then, you know, you take a payout, and that's usually quite a big chunk. With me, it's like 20-30% of the account. There are, you know, caveats to prop trading. So what I'm doing this year is to not scale too much. Like maybe I'll scale into a second position. Like let's say if I was in some kind of a swing type trade in crude oil and I entered one, but then it sort of drags to the point of interest that I originally had, like a gamma level, and rejects again, but the original execution is slightly in drawdown. I would add a second one. However, if I'm planning to add anything in a winning position, I need to be in multiple micros from the start. So minimum 2, ideally 3. And then when you add one, that doesn't have nearly as much effect on the average price. That's a whole different kind of worms. Okay, I have a 3-to-1, also I just need to leave it alone. Catherine, 3-to-1 might be too much for intraday. Try 2-to-1. 2 aggressive target. Like for the 3-to-1s to work, you need stellar trade locations. They won't just appear. Okay, so it's way too aggressive for intraday. Way too large. I know that I sometimes do that, but I don't do it every day. I will run a swing trade intraday on a 3R like maybe a couple of times a month, maybe. All right, we've come to the end. We've got 1 minute left. What's the average blown accounts to get a funded one? I don't understand what that means. What's the average blown accounts to get a funded one? You mean how many blown accounts people blow? I don't know. I really don't know that. Higher win rate, low risk reward. Lower for me. Lower win rate, higher RR. I'm always medium on all of those. What's the average blown funded? Yeah, I saw it the first time, mate. I don't know what you mean. What? Just like general? I don't have those stats. That's like... I really don't. Anyways, how do I handle the loneliness? Hey! Like this! I have Topstep colleagues. I have you guys. And yeah, so there's no loneliness here. That's why we're with Topstep, right? Any reason why I'm using GC as the correlation coefficient with crude oil rather than indices? Because I'm trying to see what GC and CL are doing as I'm executing a position in those two. I'm not particularly interested in what equities are doing. All right, that was I tried my best to do a quick fire. Sorry if I missed anybody's questions, but we will have some time tomorrow for group coaching. If you want me to answer your questions, I will be here tomorrow. Not for this stream, because I don't do the stream on Fridays. But yeah, so that's all we have for today. Let's make room for the daytime show for our lovely Hoagie Bear and co. to see what they have to say for this beautiful Thursday and how we can end the week strong. This was the Metal Markets. I'm Marcus Stoker D. Thank you so much for sharing your time with me. I will see you again very, very soon. Have a great trading day, or at least a controlled risk day. Take care.